renowned index, which is Dow Jones Sustainability Index. I think some of you might have heard of it. So I personally take care of all the financial sector global entities which are listed in DJS index. So I will be talking about what basically I do within that sort of a profile later part of this presentation. So let's first try to understand how ESG has been getting incorporated within financial sector and how it is being becoming, and it has actually already became a very hot topic. So before going to that topic, I would like to thank Pratiksha and the whole team of Sustainable 101 who has given me this opportunity, and to all of you as well. I have personally gone through the curriculum of this boot camp, and trust me, team, this whole the all the topics that has been inculcated and has been shared with all of you, they actually made really good sense. And someone who might have attended this whole boot camp might have uh, gain a very great sort of a value addition within the ESG domain. All right. So before moving on to ESG financial sector, within the financial sector, let's try to understand why the sustainable finance that we call it becoming a very hot topic. All right. So the first, obviously, and the most obvious reason that the sustainable finance is important is that we should all be doing our individual bits to make the whole world a better place. Sure, this means making sure that we are good custodians of the natural world, but it also means more than that, right? So money act as a blood within any economy, within any country or country's development. So wherever the money flows, you know, that flow of money ensures whatever the aim or whatever goal or whatever targets we are setting up to meet our ESG goals. All right. So can we have the next slide, Pratiksha, please? So since many of you might not be aware of how the financial system overall works, all right, and what are the basic participants within the financial system. So before getting into ESG in financial sector, let's understand how the financial system works and how later on, like how the ESG as a metrics, as a frameworks, as a concept has been started getting into that financial system. So basically, a financial system is an arrangement, I would say, wherein the financial institutions like banks, brokerage firms, insurance companies, investment companies facilitate the transfer of funds from borrowers to lenders and the investors. So let's try to understand the major goal of a proper financial system is to efficiently distribute economic resources and contribute a smooth service to market participants. That we have like investment banks, individual investors, stock exchanges, insurance companies, brokerage firms. So a financial system functions at corporate, national, and international levels by there are like many government sets and regulations, so they have to abide by that. So primarily we have these four participants within the financial systems. One is financial institutions, another one is financial markets, third one is financial instruments, financial services at the end. So I know like many of you might be aware of these terminologies, but this is just to notify the people who have just not involved themselves into that sort of a financial terminologies that much. So financial institutions are the intermediaries basically and provide a safe and secure options for investors, borrowers, and lenders to save, invest, and borrow money wherever. So whenever they require by following the government sets and regulations, financial institution includes banks, insurance companies, investment companies, brokerage firms. So if I talk about India, so SDFC, Axis Bank, IDFC, IndusInd Bank. So all these are like sort of financial institutions. Insurance companies, we have LIC and so on and so forth. Investment companies more or less behave like a more asset management firms. All right. So getting to the second participant that we have is the financial markets. So in these places, the exchange of assets happening through stocks, bonds, derivatives, and the commodities between borrowers, lenders, and investors. Financial markets help basically to businesses to grow extreme rapidly. All right. So also the financial markets help investors to invest in the business and gain profits. So if I talk about India scenario, Indian demographics, so we have lot many fintech stockbroking apps coming in. All right, so we have Zerodha, we have or you might be investing through Zerodha application through various stocks. We have SGFC securities and all those things. All right. So financial instruments is more or less like they behave as a securities part of the financial market participants. So financial instruments allow individuals to trade in the financial markets. These financial instruments include money, share, bonds. And the last one that we have is financial services. So they basically help to track money, share, bonds owned by the investors and provide a safe platform for investors to trade. Banks, insurance company, investment companies. So they are like interrelated to each other. And when they all four perform in any economy, so the whole uh, proper flow of money ensures, it basically ensures the smooth flow of money. So they are like most predominantly the four major participants of financial system in any geographical continent or any economy. Pratiksha, can we have the next slide, please? All right. So we just discussed the participant of the financial, components of financial markets. So let's try to understand how the financial system works as a whole with the coordination of these four, participants. So the main task of the financial system is to channel funding from savers to investors, right? The financial system performs the essential economic function of channeling funds from those who are net savers to those who are net spenders, basically. So funds are intermediated by banks and other credit institutions and directly via financial markets through the issuance of securities. And efficient allocation of funds together with financial stability contributes to economic growth and the prosperity. So I will just bifurcate the individual actors within the financial markets as investors, intermediaries, and issuers. So the investors are like us. So we are like the retail investors, we have institutional investors. So an investor is someone who allocates capital and with the expectation of a financial return. So the type of investments could be equity, debt securities, real estate, currency, and so on and so forth. A few decades ago, basically, a worldwide buyers and sellers were individual investors, such as wealthy businessmen, usually with long family histories to particular corporates. Over time, markets have become more institutionalized. So buyers and sellers are largely institutions. Investors can include big pension funds, insurance companies, mutual funds, index funds. So earlier, what used to happen? So people like us, the retail investors, were the major participants of any investment avenues. Now, what is happening? The institutional investors are taking over the retail investors. So coming to the next actor which we have is the intermediaries here, wherein you can see the equity market and the corporate markets and the money markets. So financial institutions intermediaries perform the vital role of bringing together those economic agents that we just discussed with surplus funds who want to lend with those with a shortage of funds who want to borrow, basically. The classic example of a financial intermediary is a bank that consolidates the bank deposits and they use the funds to transform them into the bank loans. So funds are intermediated by the banks and other credit institutions and directly via financial markets through the issuance of securities. And efficient allocation of funds together with financial stability contribute to a economic growth that we just recently discussed. The funds flow from lenders to borrowers via two routes. In direct or market-based finance, debtors borrow funds directly from investors operating on the financial markets by selling them in the financial instruments, also known as the securities, which are claims on the borrower's future income or assets. All right. So if financial intermediaries play an additional role in the challenging of funds, one refers to indirect finance. So financial intermediaries can be classified into various credit institutions, other monetary financial institutions, and other financial intermediaries. So the last one that we have is the issuers. The issuers basically act as the protector of all the market participants. So they are like more or less legal entity that develops, registers, and sells securities for the purpose of financing of its operations. Issuers may be domestic or foreign governments, corporation, and investment trust. So at the end, like there is a very large other number of players and participants in the financial markets. So these can be grouped as the individuals, firms, corporates, government regulators, market intermediaries. So not going to each and every participants per se. So we will just primarily focus on certain business function of financial institutions. So Pratiksha, can we have just next slide? All right. So as you can see, like these are the basic business functions for any of the financial institution. So if I talk about banks, so what they do wholesale corporate lending, they do project financing, they do at times they also do asset management via its subsidiaries. They have wealth management business functions. So there might be a possibility that the banks or the other financial institutions are involved in many other business functions, but more or less these are the most predominant, the most basic and the most common business functions spread across all the global banking systems or banking companies or financial institution companies. So given the time restriction, what basically I've done is I have restricted our coverage of the business activities to only corporate banking, retail banking, asset management, wealth management, project financing, asset ownership, and stock exchanges. So we will just see what basically does this, I mean, these terminologies means. So the moment we understand the function of these, business function, then there will be a point of bringing the ESG concept within these business functions. All right. So again, like these are the very basic business functions for all the financial institutions. So you might be noticing the stock exchanges. So stock exchanges will also act as a market participant within the financial environment. All right. So they act as a common platform wherein the buying and selling of the stock exchange stocks happens, and other various other securities. All right. So let's start with corporate and the wholesale banking first, and then we will just move so and so forth. So can we have next slide? Just a minute.
I'm Shubha. I just have a small doubt. What is this index licensing, please? Sorry.
So index licensing basically means you might have seen various indexes getting listed in any of the stock exchanges. So if I talk about my area of field, so I've been working within Dow Jones Sustainability Index. So before coming in with this index, a stock exchange sort of offers a services. Hey, like you come to us, we will just provide you an index listing services. So that index licensing is the function wherein the index get published within any stock exchange. So if we talk about India, so we have various indexes playing around. So there is a licensing force that happens before going that index live. I mean, it's a very layman language I'm trying to explaining you, but obviously there is a lot of technical aspect behind it. So I hope this might be sounding a bit, I mean,
Yeah,
piece of
got it. Yeah, yeah. Thank you so
oh,
much.
all right. And I think I just wanted to explain this financial data and analytics again. Like the financial data basically it again act as uh, a blood, I would say. So any market participant within the financial system, they need data, right? So the flow of financial data and analytics assist all these business, I mean, the participants of financial institution to coordinate with each other. So if I talk about my company itself, so S&P Global provide a lot of data services. There are like many other companies who are basically playing a very key role in supporting these financial participants in order to conduct their own activities, right? So they act as a, I mean, the linkage basically, I would say. So let's try to understand the first wholesale and corporate business function. So wholesale banking refers to the banking services sold to large clients such as other banks, other financial institutions, government agencies, large corporations, real estate developers. It is basically opposite of retail banking, but somehow it is being related to the retail banking as well. So the wholesale banking services include currency conversions, working capital financing, large trade transaction, mergers, acquisitions, and so on and so forth. So the surveys that are considered wholesale are reserved only for government agencies, pension funds, corporations with strong financials, and other institutional customers. So just giving you some stats that I have came across, I mean, recently. So there are like 2.6 trillion global commercial bank market size that is going to be expected within the end of 2022. And there is a significant, market size within the global commercial bank that we have of 4.2%, and 3.5% of global commercial bank annualized market size growth is of 2017 to 2022. Its size, I mean, it sounds a bit low, but given a lot of uncertainty that has happened within like past 2 years that we all are aware of, so this number was hovering around more than 8 to 10% prior to 2017 era, right? So I would not restrict myself to only Indian demographics while giving you a lot of examples. So Bank Colombia, Banco Santander, they are like the global biggest banks, I would say. So they all are like active within the wholesale corporate investment banking. Now, giving you a reference from Indian demographics. So let's suppose we have a bank, let's call it a SGFC bank. So what they do, let's suppose I'm a Maruti. I'm based out of I'm a Maruti company. So I'll go to HDFC Bank. Hey, I am opening a plant within like, let's say Rajasthan. So I need certain capital for it. So what HDFC will do? HDFC provide them commercial loan, corporate loan. So that's sort of a client base wherein they consider of large corporations. So that functioning is coming under wholesale or corporate banking, right? Next is project financing. So project financing is the funding or financing of long-term infrastructure, industrial projects, and public services using a non-recourse or limited recourse financial structure. The debt and equity used to finance the project are paid back from the cash flow generated by the project. So during my research, we came across with one of the most interesting article that we have, wherein it was stated how big pockets conglomerate banks have shifted their financing from oil, gas, and coal towards green financing. As you can see in 2021, JP Morgan, Citigroup, Bank of America Securities seems to have completely shifted to green financing. So this article was from Bloomberg. So this representation states how, these top-notch banks are shifting from lending to fossil fuel industry to green projects. I'll just request everyone to spend like around 2 to 3 seconds just to get insights about this particular depiction. And also, when I talk about I mean ESG incorporation within financial institution. So the wholesale banking and the project financing, they are the most important, business function wherein a lot of global banks, a lot of global asset management companies, a lot of global, financial institutions are focusing more on. So the retail banking is, again, it is important, but since the magnitude of money, the volume of money is heavily involved within these business segments, that's why these business functions like wholesale, project financing, asset management, they hold utmost importance within the ESG domain in financial institutions. So let's go and see what retail banking states. So again, like retail banking, the customer base is like us. So Abhinav would go to Axis Bank. Hey, I need a personal loan of, let's say, 15 lakhs, 20 lakhs, 10 lakhs. So that sort of functions comes under the retail banking. So the retail banking, also known as consumer banking or personal banking, is, and that provides financial services to individual consumers rather than the businesses. Retail banking is a way of, individual customers to manage their money, have access to credit, and deposit their money in a secure manner. So the most consumer utilized local branches banking services which provide on-site customer service for all or retail customer banking needs. So these are like predominant 5 types of retail banking business models that are like prevalent today. So full service banks, they are the banks that provide full range of banking services across broad customer base, from retail to business banking to commercial and investment banking. So most of these banks already provide bank assurance or wealth management related products. So we have HSBC and again like Santander as one of the biggest example for this. Specialist bank focuses on retail and small business customers and tend to have a strong understanding of the needs of their target customer segment. So the bulk of their revenue tends to be the interest income from products such as mortgages. This category also includes the small digital neobanks. So uh, these are the basic examples for them. Another one, the consumer credit providers. So consumer credit focused banks mainly target underserved section of the societies. So again, like consumer credit providers seems to be a good, match with this S part of ESG, wherein the social parameters comes into the picture. So the consumer, these banks often started out as a non-banking financial institution such as auto loan providers, subprime credit card providers, or gold lenders, but have since taken deposit to replace their funding cost. There we have another two, the last two categories or the last two models of the banking, that we have money transfer providers and the digital wallet providers. So money transfer providers, like these banks have the main objective of furthering financial inclusion, the again the S part of ESG. They usually have a limited range of basic banking products such as deposit accounts, remittances, but have a widespread network either through branch or networks provided by the others such as retailers or post offices. So digital wallet, uh, we all like somehow involved ourselves to use in order to use these digital wallets in a very on a daily basis. So Paytm, the best example for it, I think. And I doubt if I need to explain digital wallets or more about this. So that was about wholesale, project financing, retail banking. So if do we have any sort of a doubt within these three business segments? And I would like strongly suggest you to ask doubts specifically from wholesale and project, because these two holds the utmost importance when we talk about ESG within these business segments. Do we have any doubts?
Abhinav, I had a doubt regarding retail banking. Where do the new fintech banks fall under retail banking, like Revolut and stuff like that?
Yeah, so the fintechs, these fintechs would somewhere, be lying within the consumer credit providers or the digital wallets. So, they are the most predominant models of the retail banking thing. But I think the fintechs would be more or less lying within the digital wallets and the consumer credit providers, because the money transfers, they are more or less, you need to send money from India to any other countries. So I think they would be more or less be lying within the consumer credit and the digital wallets.
Okay, thank you.
I just have an observation. Somewhere all of their services overlap, maybe in terms of the size or
Yes,
yeah.
yes,
Uh,
yes, yes.
yeah.
The basic difference is that person A is taking a loan of, let's suppose, 10 lakhs, whereas the corporation is taking a loan of 10 crores. The volume of the money is getting different. Otherwise, everything seems to be very same. Corporate banking do issues credit cards, retail banking do issues credit cards, corporate banking do issues deposit services, retail banking do provide deposit services. It's just that where there we just call it current accounts in corporate banking, and retail banking we just call them a normal savings account. The basic functions is same: provide lending, accept deposits, and lend money, right? So but the only difference is the volume of money
Thank you. Thank you so much.
and the type
Uh,
of clients, obviously.
Abhinav, I had another doubt.
Yeah.
The microfinance banks, the microfinance financial institutions, where do they fall under this? Do they fall under project finance?
So basically, what generally happens is, a lot of financial institutions have started using the terms MSME lending, small SME lendings. So as far as I have been working within this financial sector, and I've gone through with more than 500 600 financial institution annual reports. So all the banks, I would say, you take it from Santander, you take it from HSBC, you take it from Citigroup, all the banks are providing small and medium enterprises lending. So at times we do consider it as as aspect of ESG, and at times we do not, right? So as far as the Dow Jones Sustainability Index, the methodology says we do provide that sort of importance to MSME lending, but we just more or less we also focuses more on the lending of microfinance, that we call it. So there is a product called microfinance. So microfinance is something which is lending it to more socially deprived customer base. So villagers, the people living in rural areas. So these sort of customer groups are more or less more targeted for the microfinance products. So if I talk about MSME, they're all prevalent within full service banks. In fact, at times, specialist banks also provide MSME lendings.
Okay. Thank you.
All right. So do we have any doubt from the depiction that we have, like JP Morgan's coming and, becoming a full, the green debt provider? I mean, we won't just say the whole loan book of JP Morgan has turned green, but there is a specific product categories, which is the debt basically. I mean, we have different type of debt again. So I mean, this depiction was in itself very interesting when I uh, gave it a look. All right, so let's move
Um,
ahead.
it's Arun here. The
Yeah,
one of the, yeah, thank you. One of the key observation I had in the project finance was the proportionate of the green. I don't know. Do you have any narrative why the size of the project is reduced, or is the green remains the same from year on year?
right. So I also noticed that sort of observation, the wherein the total magnitude of the landing has been reduced, but this is not the case. It's just the depiction wherein how these top-notch banks have been increasing their green lending within these their overall loan book. So I mean, let's not consider that green thing as the overall volume of the lending.
Mm-hmm.
It's just
That is seen. But I was wondering, like, what does that we need to take from that depiction
so the
from 2020 2021 person?
Right. So the idea here is to look at the trend from the 2015, how the green lending has been increasing, and the fossil fuel industry, the lending within the fossil fuel industry has been in a declining stage.
Sure. Okay, that's
Uh,
good.
so maybe what I can do is, since I'll just share the link for this, this article. I think it was very interesting as far as my point of view was concerned. So I'll share it across with you, all of you, post this session. Somehow I'll connect with Pratiksha as well for this. I hope this will help.
Yeah, sorry for
Yeah,
interrupting.
I have this. I think this will help all of you. Yeah, go ahead.
So my observation with what Arun was saying regarding the lending, right? Maybe like for example, if you take JP Morgan, they've completely stopped funding fossil fuel and only do green projects. That's why that white element has been totally eliminated and only green is shown. Whereas Wells Fargo still does fossil fuel industry, but the green project size has increased. I think
Right, right.
that.
Right. So there was a bit of a confusion within this segment only. So it's like the increase in the green project. So it's not a overall lending book that is being talked about here, right? So there is a specific product category. Actually, I'm not aware of as of now because
So,
I gave it a
yeah, because if you look on top, the just below the greening, the big banks, the fossil fuel is in white and the green projects is in green. So my
right, right,
observation
right.
is maybe it's just totally eliminated. For example, BO of A Securities doesn't do fossil fuel funding anymore. It just does only green projects. I mean, that could be the case.
Right. And also the conflicting point was that since I have already gone through with a lot of reports of JP Morgan, because they also are the participants within the index that I'm working on. So they do still finance, fossil fuel industries. It's just that there was a specific product category. I mean, I'm still again like repeating it in a sense, it's not a overall loan book size of these banks. There was a specific product category. Yeah.
Right. Yeah. Got it.
All right. So
Abhinav, BlackRock comes under investment institution here.
come again.
Where does the BlackRock comes in?
So BlackRock, they are like the biggest as
Multinational
yeah, yeah,
investment. So it's
yes. So they are not sort of providing any sort of deposit services. So they are more or less are considered within the asset management business function.
okay. Asset management.
Yes. So it's just we give less. I'm explaining it in a very layman language. So I'll give 100 rupees to Blackstone. And hey, say, can you just invest these 100 rupees somewhere? So the BlackRock will invest in any of the avenues. So it's like more or less they're managing the money of yours and giving you the returns out of it. All right. So let's move to wealth management. Pratisha, can you just turn up the
Yeah,
slide more?
I did.
All right, all right. So the wealth management is an investment advisory services, that combines other financial services to address the needs of affluent clients. Using a consultative process, the advisor gleans information about the client's wants in specific situation, then tailors a personalized strategy that uses a range of financial products and services. So it's like we have a lot of money, we go to UBS or State Street. Hey, I mean, we have a lot of money, can you just assist us in terms of managing that sort of a money? So State Street will say, hey, I mean, let's put your money here and there, let's put your money in this avenue. So that sort of a advisory thing is known as the wealth management. They are managing your wealth basically. So to meet the complex needs of a client, a broad range of services include the investment advice, estate planning, accounting, retirement, and taxation services as well at times. I mean, it's not the major dominant services, I would say, but yeah, it's a part of it. So typically the fees which are being generated from this segment are termed as wealth management, fees, commission fees, that sort of thing. So as per Oliver Wyman investment, the investor interest in sustainable investing has grown significantly. In 2019, it was estimated that high net worth individual and ultra high net worth individual clients that had 4 trillion invested in such sustainable investments. So it seems that the sustainable investments will grow at 18% of annually to a total of 9 trillion USD by 2024. So the difference between wealth management and asset management, so there are a lot of queries that I get, I mean, in terms of, can you just explain how asset management is differing from wealth management? So the asset management is more on a technical side, right? So they purchase securities, they purchase stocks, and then they sell it on a daily basis, and then they generate return, and then they give it to you. So there is a technical aspect involved into it, whereas the wealth management services are more or less like a advisory thing. It is more or less the verbal thing that has been happening within the financial institution and its clients. So they will say, you can invest your money in these avenues, okay, you can invest your money by doing so and so things. So there is an advisory that is being happening, right? So that is how a wealth management at times differs from the asset management business functions. At the end, the stock exchanges that we have another, as a participant of financial institutions. So the stock exchange is a marketplace, as I have told you earlier also, where the securities such as stocks and the bonds are bought and sold. So the bonds are typically traded over the counters, but some corporate bonds can be traded on stock exchange. So stock exchanges allow companies to raise capital and investors to make informed decisions using real-time price informations. So exchanges can be a physical location or an electronic trading platform. Though people are typically familiar with the image of a trading floor, many exchanges now use electronic trading as well. So the stock exchange act as an agent for the economy by facilitating the trade and disseminating information. So first and foremost, uh, the contribution is of raising capital. So through initial public offerings or issuing of new shares, companies are able to raise capital to fund operations and expansion projects. So this provides companies with avenues to increase growth. Second, the corporate governance. So the companies that are publicly listed on stock exchange must conform to reporting standards that are set by the regulating bodies. So this includes having to regularly and publicly report their financial statements and earnings to their shareholders. So the actions of a company's management are constantly under public scrutiny and directly affect the value of the company or the goodwill of the company, right? So the public reporting helps ensure the management will make decisions that benefit the goals of the company and its shareholders, thereby acting efficiently. And the third last one is the economic efficiency. So in addition to encouraging management efficiency, exchanges also facilitate economic efficiencies through the allocation of capital. So stock exchange provide an avenue for individual to invest their cash as opposed to merely saving these funds. So this means that the capital that would otherwise be untouched is utilized toward economic benefits, resulting in a more efficient economy. So in addition, exchanges also provide liquidity as it is relatively easy to sell one's holding by providing liquidity and real-time price information on company shares. So the stock exchanges also encourages an efficient market by allowing investors to actively decide the value of company through supply and demand. So the notable stock exchanges that you all also might have heard of is New York Stock Exchange, Nasdaq, Shanghai Stock Exchanges. So that was more or less about the stock exchanges. So there are like two other important business activities which are index licensing that I have just got one of the query, and the financial data analytics. Whether an institution is a fund manager, asset management, exchange traded fund strategist, or IA, a stock exchange can be used to benchmark both active and passive strategies. An index can be used to license exchange traded funds, exchange traded notes, structured products, future and options, mutual funds, and so on and so forth. All right. So that was about how the predominant business functions are getting operated within the global financial system. One is wholesale, another one is project finance, third one is retail banking, fourth one is wealth management and the stock exchange. So let's see, can we just move to the next slide? Uh, let's see what asset management business function means. So if many of you might not be aware of how asset management business function works. So we have clients, right, and we have the asset management firm. So it's like asset management refers to the management of a client cash and securities by a financial service companies that we have, like BlackRock and Vanguard. I received a query in regards to the BlackRock. So the financial institution offers investment services, including a wide range of traditional and alternative product offerings that might not be available to the average investors. An asset management company that we call AMC is a firm that invests a pooled fund of capital on behalf of its clients. So what they will do, they will collect XYZ amount of money from every individual and they will make it a pool basically. And out of that pool, they will just distribute the units of it. So let's suppose one AMC has collected, let's suppose 100 rupees of pooled money. So that AMC would divide these 100 money, this money in 10 units. So 100 divided by 10, we have 10 units. All right. So asset management companies are commonly referred to as money managers or money management firm as well. Individual investors usually lack the expertise and resources to consistently produce strong investment returns over time. So therefore, money investors rely on asset management companies to invest capital on their behalf. So there is a one way that we can just invest in stocks through ourselves only, but for that we need to have a lot of knowledge. We need to track the company, we need to go through with the company's annual report day in day out, and then take a call of buying and decision. Whereas the other model says that there is a person, who is already doing that sort of activity. It's his or her job to do so. So we are giving our money to that person and we are just saying, hey, can you just manage this money on my behalf? So that's how the AMC comes into that picture. So AMC manages your money to generate returns over time. Right. So asset management companies are usually a group of investment professionals with broad market expertise. With a large amount of pooled capital, they are like able to utilize diversification and complex investment strategies to generate returns for investors. AMC generally charge, so how their revenue model works, AMCs generally charge a fee to their clients that is equal to a percentage of total asset under management. So AM is simply the total amount of capital provided by the investors. So an investment or asset management fund may charge 2% fee on AUM. Consider as an example, asset management who oversee, let's suppose 100 million USD fund. So the fees for an year or another time period would be like around 2 USD million. This is about how the big asset management function companies works on. When there is a huge volume of money coming to that, right? So that's how the asset management business function works. So as an example, we have like BlackRock, Vanguard, UBS, Fidelity. So they are like major asset management firms having a huge uh, asset under management as a part of their asset management book. So let's see certain ESG assets, data sets. So can we just move next slide, Pratiksha? All right. So again, there was one of the report by Bloomberg. So as per that report, the global ESG assets are still on track to exceed 53 trillion USD by 2025. So that's how the ESG assets or ESG is holding the utmost importance within the financial system. And when there is a huge demand of such an assets coming in future course of years, you can imagine the impact of the same on, on the companies which are supporting these ESG assets, wherein the career, the profile, the designation of ESG comes into the picture. So basically it represents more of a third of 140.5 trillion in a USD in projected total asset under management. It's a perfect storm created by the pandemic and the green recovery in the US, EU, China, and will likely to reveal how ESG can help assess a new set of financial risks and harness capital markets. So let's assuming 15% of growth, half the pace of the past 5 years, ESG asset under management could climb to more than a third of the projected 140.5 trillion USD global total by 2025. ESG assets are on track to reach, as I just said, 53 USD trillion based on the Bloomberg's analysis, up from 37.8 trillion by year end. So they jumped to 30.6 trillion USD in 2018 from 2020.8 trillion in 2016. So while Europe accounts for half of global ESG assets, the US has the strongest expansion this year and may dominate the category starting in 2022. So the next wave of growth could come from Asia, particularly Japan. So exclusionary screening. So basically, what is exclusionary screening? We will just talk about in upcoming slides. So exclusionary screening based on religious values and other criteria makes up the biggest chunk of ESG investing at about 20 USD trillion globally in 2018. So this report was being given by the McKinsey's and the Global Sustainable Investment Alliance. And at the end, the Europe has historically led on ESG assets. The US has seen over 40% of growth over the past 2 years and now accounts for USD 17 trillion. So nearly half of the global, 35 USD trillion assets under management. So these are like basic stats of the same, and we all can see how the ESG assets are like, they are like spreading like fire. And people generally ask me like, we are already on boom, the ESG is already on boom. No, I mean, I personally see ESGs just started to getting on that boom stage. I mean, it's not yet, and we just have to see a lot of things coming in next 5 to 6 years, or let's call it a decade also.
Yeah, just one basic question. When you say ESG assets, it means investments or assets that are compliant to ESG, right?
Right. So again, like, there would be another topic of, let's call it a greenwashing comes into the picture. Let's put that greenwashing topic for a moment aside, and let's assume that when we talk about global ESG assets, we just trust that they are the ESG compliant.
And Abhinav, you said the next wave of growth could come from Asia. Why not India? Where is the India stand right now?
So we will talk about the ESG aspect within India maybe on a later part of this whole session. I mean, because it's a very elaborated topic altogether. I
Okay.
understand, like, in India we are still sort of running. I mean, but I mean, it has its own reason. I mean, we can just discuss it post this session.
Okay.
All right. So I'm just trying to give you the global perspective as to
Small
how.
question in the last slide.
Yeah.
Uh, what I mean, I have no like background in finance whatsoever, so I don't know what the bear bull and what that meant in the slide.
Right. So bear means it's like, so bull means something is going on a very high note. The sentiments are right. So if I talk about Indian stock market, so whenever the markets are increasing, the Sensex is increasing, or let's suppose, let me explain it in a very more layman language. So when a stock price is increases and it keeps on increases, so basically there is a bull market, there is a bull situation. Whereas the bear means it is like a dip, the performance in a very low performing equity markets, I mean to say.
Okay, all right,
Yeah.
understood. Thank you.
All right.
Right, Abhinav.
Hello.
Hello, Abhinav.
Your voice is
Can you
echoing. Your voice is echoing, I guess.
uh, can you hear me now?
Um, yeah, go ahead.
Yeah. So just wondering, do hedge fund managers also consider ESG metrics or not?
At times they have started. So, uh, can we just put yourself on mute for a moment because there is a lot of echoing coming in. Yeah, thank you and apologies for that. So, the concept of hedge funds are like predominantly common within the, I would say that the North American regions. I mean, Europeans are also getting into that, but as of now, the hedge fund managers, in my personal opinion, I mean, I do not have any stats backing my opinions, but I would just say that the hedge funds are the another riskier form of, the investing the money. I mean, they are putting the huge volume of money, so they at times they have started considering the ESG aspects, but still, I mean, they are sort of not supporting the view of ESG. I mean, I have gone through like a lot of articles from various hedge funds managers, so they are not as of now running at that pace within the ESG space. They do consider, they have started though, but it is not the biggest chunk, I would say.
What is the difference between hedge fund management and asset management?
It is somehow related. It's just the another, I mean, it's just the magnitude of money. I mean, the hedge fund managers, they it's so what happens is asset management is that the people like us, the normal retail consumers, the people having a small pockets, they can also participate in asset management industry, wherein in hedge funds they are like more or less the good, I mean, money holders that participate within the same processes. So that's how it is differentiating under, I mean, again, like the momentum or the magnitude of money is the biggest differentiating factor. And obviously, like the technical part of it, the lot of strategies also get differs. It's just that the hedge fund is a limited partnership of private investors whose money is managed by the professional fund managers who basically use a wide range of strategies, use including leveraging or trading of non-traditional assets to earn above average investment returns. So if I talk about the returns, the hedge fund managers are at, I mean, they are able to generate more returns as compared to the asset management firms. I mean, the data says it mostly.
Okay. Investment firms are basically the same.
Yeah, somehow they are like interrelated. So investment firms, they are like sort of I mean, the hedge fund business function, the asset management business function are sort of the subset of investment firms. So there is a, let's
Okay.
say, company A investment firm, so that company would be doing this portfolio management services. They might be providing wealth management services, they might be providing asset management services. It's like a parental head, I would say.
Okay. 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 Got it.
Right. So let's start getting into the ESG touch. I mean, the ESG taste on in these topics. So can we have just next slide, Pratiksha? Yeah. So as you might be aware of, like ESG stands for environmental, social, and governance. So the investors are increasingly applying these non-financial factors as a part of their analysis processes to identify material risk and growth opportunities. So ESG matrices are not commonly part of mandatory financial reporting, though companies are increasingly making disclosures in their annual report or in a standalone sustainability report. So there are like numerous initiatives, or numerous institutions such as Sustainability Accounting Standard Boards, the Global Reporting Initiatives, and the Task Force on Climate Related Financial Disclosures are working to form standards and define materiality to facilitate incorporation of these factors, which is ESG, into the investment processes. Another common term for the process of creating a sustainable investment portfolio is socially responsible investing, or SRI. While SRI and ESG both seek to build more responsible portfolio, there are a few differences between these two terms. So ESG is a system for how to measure the sustainability of a company or investment in three specific categories, which we have: environmental, social, and governance. The social responsible investing, the ethical investing, sustainable investing, and impact investing are more general term. Often, social responsible investments are measured using an ESG based grading system. Historically, certain forms of sustainable investing varied in how they created their portfolios. For example, SRI used an exclusionary only approach to filter out investments. Some consider immoral, like tobacco or alcohol. ESG investing includes those same investments, but also include companies deemed to be creating a positive impact. So let me give you a very, a small example. So let's suppose there is a asset management firm A. So they come up with one of the fund, let's suppose SRI fund, which is, let's say, it's a mutual fund, I would say. So they will invite money, right? So they will say, hey, can you just invest your certain part of money in this fund? So within that fund there would be a portfolio of companies, right? So how that asset management company might have came to that list of companies, so they might have, applied a filter of exclusionary policy. So they will say, we will not invest in those companies which are involved in coal related financing. So as a part of the fund's portfolio companies, if any of the companies financing the coal businesses, they will be excluded out. So that is how the SRI, you know investing works. They apply filters, whereas the ESG term is sort of again, it's a parental head of SRI thing. So the larger the world of sustainable investing has grown, the more of these terms, among others, have been used interchangeably. So you will see providers who offers a socially responsible portfolio that includes ESG funds, as opposed to just excluding certain investments, and ones with the same title that use a solely exclusionary approach. So that is why it's important to look into the methodologies used to create a portfolio, no matter what it's called. So I am using a term called exclusionary again and again. So exclusionary means we are not going to, I mean, if I am a AMC or I am a bank or I'm a sort of any financial institution, so I would say, hey, I am not going to invest, comma, I will not going to fund or finance XYZ business activities. So that XYZ business activities is something which is not considered to be linked with ESG. So it could be, I mean, it could be alcohol, it could be tobacco, it could be coal, it could be unconventional oil and gas, it could be something which is sort of harming the E and S aspect of ESG, right? So that exclusionary policies are being opted by various global banks now on, I mean, nowadays. So in my upcoming one of the slides, I will show you a live example how the big companies are disclosing about the same, what how they are disclosing about how their exclusion works. So that we'll see in upcoming few slides. So can we have this next slide, Pratiksha? All right, so we have this slide. So this representation states the proportion of ESG investing by type of investors. So the money managers, they are holding the most part of it, right? Another, we have the money managers on behalf of uh, so the first part talks about the money managers on behalf of institutional investors. So institutional investors are the big clients basically. So they are majority, the part of this institution consists of corporations, the banks. Second is the money managers on behalf of individual retail investors, so the people like us. So it accounts for 4.55 USD trillion. So this whole data sets is from the US demographics as per what I have seen. And the third one is the institution investors. It holds for like around 1.658 trillion USD trillions. The fourth one is overlapping investors, and the last one is purely the money managers. So money managers are like they are like putting your money in highly liquid form of securities. You invest today, you can redeem it tomorrow, right? They are like very highly liquid investment avenues. So the institutional investors and money managers filed for shareholder resolution on ESG issues worth USD 2 trillion. I mean, it's such a, I mean, it's a very huge number, I would say. So that was about how the proportion of ESG investing is, differing as a part of type of investors. So the institutional investors are the money managers which are like putting on behalf of institutional investors are accounting the majority part. Yes, can we have the next slide, please? Right, so it's another a trend from 2005 how the big institutional investors have started incorporating ESG matrices back in 2005. And in past 15 years, I mean, the end date of this representation is of 2020. So the compounded annual growth rate is 19.5. It's too huge. I mean, it is just not uh, too less, I would say, but you can see the trend. I mean, how institutional investors have started incorporating ESG matrices. So what incorporation of ESG matrices means that how if I am putting your money in some of the other avenues, so what sort of avenues are basically I'm calling for. So if I'm putting my money or your client's money in a lot of coal related businesses, so I mean, they are not incorporating that sort of ESG matrices because obviously like fossil fuels are not considered that the violating the very basic meaning of E within the ESG part, right? So I was just talking about the public disclosures of two banks. So can we have just next slide? Thank you. Right. All right. So there is one bank that I've been taking name since start of this presentation, which is Bank Colombia. Another one is the Bank of India. So this is based out of the European part. I think it's another the industry leader within the Dow Jones Sustainability Index. So if you want to see the financial leaders within Dow Jones Sustainability Index, you can just normally Google it up. You will see a lot of banks coming in. The Caixa Bank, we have Banco Santander, Bank Colombia. These are like the most scoring companies within the index. So I was talking about the exclusionary part. So you see the Bank Colombia, the second box. So they say we will not finance projects related to the production, marketing, or use of products and substances or activities from the following exclusion list. Right. So this is what I was talking about, the exclusion part. And they have disclosed this in their reports, which are like publicly available. Right. Sustainable finance, how they are incorporating the ESG matrices within their business functions. The third one is how they are incorporating the negative screening. So Bank Colombia will not invest in companies or projects related with the production or commercialization or the use of product substances and activities mentioned in the following exclusion lists. So this is, I mean, this has become a very common practice nowadays for global banks to report on. So this whole slide is meant as a part of disclosure, right? So if all of us might be looking afterwards to getting into the research part of it, so you might come across with such information if you have selected the financial sector as a part of your scope of work, right? So another example is from India. So it says that they implement one of the tools which is known as SARAS, environmental and social risk management system. So this is nothing related to any tech, tech thing. Is just that they have defined a process wherein they have implemented a environmental and social risk analysis system. So if you just give it I'll just give you like a couple of minutes. You can just read this whole thing, disclosures from both Bank Colombia and India, so that you will just get to know how the bank have started reporting on various ESG related information. So basically, it's like financial institutions are integrating ESG aspects into their wholesale corporate investment banking businesses. Moving towards a sustainable finance model means that all branches of a financial institution are expected to consider ESG aspects in their operations, oblique business functions. So the world has become socially and environmentally more conscious, like market players, including issuers, intermediaries, and the banks that we have just talked in our previous slides, are facing significant pressures to assess the influence of ESG factors on their activities. So integrating ESG factors into the credit analysis strengthens a financial institution ability to assess the downside risk of its credit investments in light of the transition and physical risk associated with climate change.
So
So
they created this policies, which is called ESG integration policy.
yes, so different banks or different financial institutions can term this sort of a policy with a different terminology. So someone says ENS, policy. Someone says
Mhm.
a responsible investment policy. Someone say ESG policy. So the name differs, but when you read between the lines, you will just get an insight. Yes,
Okay.
they are integrating the the ENS part within the financial system. So if you read both the aspect, like both the disclosure by Bank Colombia or India, so you will notice like the information is very different, but the underlying meaning is somewhat similar, right? And that's how my area of work comes into the picture. I mean, I'll talk about this on a later part of the presentation, but I'm just giving you a hint. So we just on a daily course of business, what we do, we read excessive number of numerous reports, and the reports consist of ranging it from sustainability reports to various policies, right? So then we just accumulate the content. We just bring a sort of a analysis part into the picture. So I would say, hey, this bank has having a policy of not doing so and so thing, and this is a disclosure, and this is how it is getting differentiated from its competitors. So that's how we are involved in studying like numerous reports. So if I talk about myself, so I've been working within this process of the index since 2.5 or 3 years. So I have personally worked on more than 500, 600, or touching 700, 800 financial institution companies and provided them a score, or I would say a rating. So obviously I cannot, like, due to privacy thing, I cannot disclose the name of those companies, but yeah, so we read reports, we assess these banks, financial institutions on various numerous data points related to ESG. So we study companies disclosure in terms of their emissions, the water, the waste, the scope 3 emissions, their CDP disclosures, their TCFD disclosures, right, their decarbonization disclosures. So this is just the E part. I mean, if I have to give rating to one company, so it usually takes 2 to 3 days, right? So it takes that much of time because you have more than 2000 data points wherein we work on analyzing a company. All right, so I'll talk about more of this thing later half of this presentation. So it's just that I just wanted to give you all exposure as to how the banks or the financial institutions have started working on disclosing the things. All right, so let's move to another slide. So we have another very important topic now. I don't know whether you all have heard of the term equator principles or not. So any one of you have heard of it? Maybe yes, no. Yes, no. Anyone? All right. I think I might have. All right. All right. So let's. I think all of you might not have heard the term called equator principles, and like the next slide, I would be talking about on United Principle of Responsible Investments. So within the ESG domain of the sustainable finance of business functions. So these two frameworks holds at most importance if I talk about the ratings part of it, I mean the score providing part of it. So there are like many sustainable finance frameworks, standards, but I'm like going to focus more on the two frameworks that are like we have, like Equator Principles and the United Nations Principle of Responsible Investments. So what Equator Principle means? So like the Equator Principles is like a risk management framework adopted by financial institutions for determining, assessing, and managing environmental and social risk in their projects. Its primary intent to provide a minimum standard for due diligence and monitoring to support responsible risk decision making. So Equator principles are also known as EP. So the EPs apply globally to all industry sectors and to 5 financial products: project finance, advisory services, project related corporate loans, and project related commercial loans, bridge loans. So the relevant thresholds and the criteria for application is described, is more or less, I mean, there are like various principles of Equator principles. So principle 1, revenue and categorization. Principle 2, we have environmental and social risk assessment. The principle 3 is applicable of environmental and social risk standards. Principle 4, environmental and social management system and Equator principle action plan. Fifth one is stakeholder engagement. So a stakeholder engagement means that how a bank is, having a conversation with its client as to determining the ENS part of the upcoming project where the bank is going to finance, right? The principle 6 means grievance mechanism. The principle 7 means independent review. Independent review here basically means how, so supposedly one company is coming up with one project, and that company has gone to one bank that, hey, I need money to finance this project. So that bank would conduct a independent or external review of that project as to what sort of harm that project is going to do to environment, or let's say to any I mean the S part of ESG, the social factor, right? So external audit, the independent audit of that project, is one of the principle of Equator principles. The principle 8 is convenience. The principle 9 talks about the independent monitoring and reporting, and the last one is the reporting and transparency. So Equator principle wants the companies to report on the projects where they have implemented the frameworks of Equator principle. So if you can see the slide, I have provided a one live example of National Australia Bank Limited. So that's how the disclosure looks, right? So it's like the total number of project finance transaction that reach financial close is 49. So here this number of, I mean this 49 number has like they all these projects have inculcated the principle of the framework of Equator principles. So when any company or like any entity applies these principles, so there is a, there is a overview that all the ENS part has been already been taken care of, right? So that's how they report on their categories, like total project finance portfolio transaction by EP categories A, B, C. So A here means the most ethical ones, and so on and so forth for the B and C. So the transparency part means the disclosure of the I mean the description of the project. So there is a case study which has been disclosed by the LP, this the National Bank Australia Bank. So the example, you can just give it a read. So it's just a description of that sort of a project as to how, what this project aims to, how they have inculcated the the ENS part of it. So if you see the third paragraph, as a part of National Australian Bank Limited due diligence, credit risk assessment, and Equator principle compliance processes, we undertook an ESG risk assessment which include consideration of a range of environmental aspects related to the wind farm development. So it's like company A is coming up with one project, they need money, they will go to a bank. Now bank will try to assess the whole ESG part of that project, and they will give their outcoming, I mean their report saying that, hey, this project seems good, I mean there is nothing harm they're going to do to the E and S part of the ESG, so let's finance it. So that's the most layman language part of it. So there are a lot of technical thing happens at the end, the credit appraising processes, the grading system. So if they need a financing of, let's suppose, 500 USD billion, so what they will do, they will say that, hey, I mean 100 USD have a negative part of it, the negative component of ESG. So we will just downgrade a grade here, and then rest part is fine. So there is a lot of technical aspect that happens at the end. So, but when any bank is claimed to be a principal of EP, so we just say that they are doing their project financing activity in a very decent manner. I mean, they have been taking care of ENS part at most, priority. So that's how the overview of the equity principles looks like. I mean, if the bank is a signatory of the same, right? So
Um,
there are
Abhinav, what is ENS?
ENS is environmental and social risk. So ENS, this term has been, been used by a lot of banks and financial institutions. So they just say, ki, hey, we have conducted ENS assessment, means environmental and social risk assessment. They are not going to harm the environment. I mean, just giving you a very layman's language thing. They are
Oh,
not going. This project is not going to harm any tribal population near to that location of the project. So that ENS thing is known basically. I mean,
also यहाँ पे लिखा है the project was categorized as a category B under the equity principle. B, what does B means? Do we have to check from on a website?
so the no, so it's like the basic meaning of ABC here means that, so A means the most ethical, so it's just sort of a grading thing. I mean, A being the most ethical one, B is a little bit less, C is like, so if we have the credit ratings, no, like giving to a lot of corporates is sort of similar to that only. It's just that they have their own the thresholds as to where A needs to be captured on, what is the eligibility thing for projects coming in B category and where in C. So let me give one example. So let's suppose there is one project, right? So that project is coming to the area wherein a lot of tribal population is, I mean, is present. So in order to establish that project, one, the company needs to take care of the tribal population. So they might have to migrate them, or they might have to, they might have to do some sort of a negative thing to those tribal things. So this small element might degrade the rating of that project. So because of this, the project might get listed into the C category. So it's like, the if in case a bank has a lot of projects under EP category C, so it's a sort of a negative thing. I mean, it's sort of a wrong impression that is being provided.
Okay. I have to I am known PRI, but I am new to Equator Principle. Thank you. It was really
Mm,
to know this.
No worries, no worries. So it's like the equity principles are adopted and applied voluntarily. So it's not any regulatory requirement. So by what's known as equity principle financial institutions, or EPFI. Currently, 116 equity principal financial institutions in 37 companies have officially adopted EPs, covering the majority of international project finance debt within the developed and emerging markets. So if you see the top leading banks on a global basis, I think out of 10, you might see 4 or 5 being the signatory of equity principle. All right. So let's, yes.
No, I just okay.
All right. So this equity principle is more or less linked with the wholesale oblique project finance and business part of the banking financial institution that we just talked about. So this equity principle is not linked with asset management or retail banking, or it's more or less linked with the project financing thing. So that's how the equator principle came into the picture in 2002. So I'll just take you all, I mean, I'll just give you all couple of minutes just to read the slide again. So on one side there is a short description, and on the other side we have a public disclosure from one of the leading bank based out of Australia, and as to how they are incorporating equator principles in their project financing.
I am just taking a step back. And who regulates the equity principles? I know that you did mention there's no regulatory requirement, but somehow the framework was formed, and somewhere it has to be regulated, no? Or someone is regulating, no? I understand the reason why I'm asking is like it is formed by the private banks along with IFC, where even IFC is still not a, I mean, it is still in private equity. That's what my understanding. So that's why I'm asking.
Right. So as of now, s- it's more or less regular, or I would not say that directly linkage between the any regulation. So I would say it might be regulated indirectly by the country's respective the I mean, so if I talk about India, so we have RBIs and SEBI taking care of the most part of the financial regulatory norms, so they might be different as per the country's thing. But again, this whole I mean, this framework is purely on a basis of voluntary, alignment. As of now, none of the government has made this thing regulatory requirement. But if any of the bank is aligning with the equator principle and they are doing any mischievous sort of activities behind with the name of, let's say, equator principles, so obviously the financial related regulatory authority of that respective country will be coming to the picture to take care of certain things.
Right, right. The as we go through all the ESG regulatory and also the frameworks, I see so many things coming up and all those stuff. But I'm just wondering, and what is the mind share that went in to introduce this principles? Someone has to
So
be, yeah, benefited, no? Maybe.
right. So it is just I mean, when I looked on the history part of it, so it's just that couple of I mean few of the private institution came into the and they joined hands. So it could be possible that there would be a certain another meaning of doing so. But as far as I have gone through a lot of disclosures about this principles, I think they are not being governed by any government regulation. It's just that if so how does it happen is that if I talk about S&P Global or any other rating agencies, so they might have taken these principle as one of their threshold. I mean, if let's suppose I am a equator principal signatory, so I'll get a bonus. I mean, I'll get a brownie points in the ratings thing.
Understood. Okay. Mm-mm-mm.
Right. So if all of you, I mean, this is another note that I would wanted to give is, so if any one of you are looking for the ESG career within the financial systems, so I would request all of you to, just to go and read about equator principles and united principle of responsible investments, and that would be coming in my next slide a bit more, right? I will also share like couple of list of top-notch banks who have been the signatory of Equator Principles and UNPRI since quite long. So the more you will read the reports of these banks or financial institutions, so you will get to know how these things are getting inculcated or integrated within their business functions, right? Because obviously, like the 1 hour session or 2 hour session won't be enough to tell you all the nitty-gritties of these principle or these frameworks, right? So these two frameworks are the most, in my personal opinion, is the most basic one. So whenever I have taken a couple of interviews in as a part of my job thing, so I they are like one of the question that I always ask. I mean, so that's how these two things hold certain importance, right? So Pratisha, can we have just next slide? So maybe we are running bit. Yes, thank you. All right. So another framework that we have is UNPRI. I don't know whether you might have heard of it or not, but again, like it is very predominant and very common within asset management function. So the UNPRI is an international organization that works to promote the incorporation of ESG into investment decision making. So it was launched in 2006 with the support of UN. The PRI as of date, I mean, as of March 31, 2021, total of 4,900 financial institution has participated in PRI, right? So it's a very huge number on a global basis. Again, like the top asset management firms that I have shared as an example on the right side of it: Fidelity, Vanguard, Amundi, Caixa Bank, Barclays, Blackstone. So they all are UNPRI signatory. So again, like we have 6 principles for it. So first is, so whenever a bank, whenever one financial institution say, hey, I am the signatory of UNPRI, so they just commit, we will incorporate ESG issues in investment analysis and decision making processes. Principle 2, we will be active owners and incorporate ESG issues into our ownership policies and practices. Third one is, we will seek appropriate disclosure on ESG issues by the entities in which we invest. Fourth, we will promote acceptance and implementation of the principles within the investment industry. Fifth, we will work together to enhance our effectiveness in implementing the principles. And the last one is we will each report on our activities and progress towards the implementing the principles. So as far as this I mean the snippet is concerned, so there is a proper PDF report that is being generated and it is all publicly available. I mean you can just go and check and type for Vanguard UNPRI report, so you will get the PDF online. So there is nothing like any login or something is required. So it is a document ranging it from like 62 going up till 200 pages. So they just disclose about as to how they whether they are integrating their ESG thing into their asset classes or not. So that's how it looks. So if you see on the left part of it, so it says we engage with companies on ESG factors via our staff collaborations and service providers. Right. So whether they are doing engagement or not, ESG engagement, they are giving any proxy voting rights or not. So on the second part of it, you see there are like various policy based disclosures within the UNPRI. So one bank or one institution commits that the RI policy, RI here means responsible investment guidelines, are integrated within the asset classes, or we have the sectorial specific RI guidelines as well. So sectorial specific RI guidelines means we have different policies for agro based businesses, we have separate RI responsible guidelines for, let's say, tobacco based companies, as to how we are going to deal with them. So there is a sector based RI policies, right? So that's how uh, the disclosures looks like. So the coverage by AUM means whether their responsible investment policy covers how much scope of their asset under management. So the example that I took, I just don't know which bank, I mean which financial institution this report for, but let's suppose it to be an X. So the X is applying the responsible investment approach to all of its asset under management, right? So that's how the disclosure looks like. So post this session, I mean if anyone would like to come connect with me, so they can, I'll just share various UNPRI reports so that you can just go and check as to how the disclosures look like, right? So again, like the momentum of being the signatory of UNPRI is increasing on a very rapid rate. So you see there has been a constant increase of 28% of year on year to 4902 signatories as of 31st March 2002, right? The US being the maximum one. I mean, whenever I work on providing analysis of any of the companies on their ESG disclosures within the financial segment, out of let's suppose 20 companies, like 15, 16 companies are UNPRI signatories, right? So that's how they are like spreading like fire. I mean, a lot of companies are being getting signated to UNPRI. Again, coming back to the regulations, so it is again on a voluntary basis, but again the goodwill of UNPRI is extremely high since it was being brought into the picture by UN thing only. So again, no government is enforcing these things. It's just that if any banks or any financial institution wants to get more scores in the ratings or want to give a good impressions to the investors, so they get themselves aligned with the UNPRI principles. All right. So again, repeating, uh, equity principles and UNPRI is the most basic thing that we all should be aware of. All right. So Pratisha, can we just move to next slide? So I mean, out of 100 global banks, more than 80, 90 banks or financial institutions are coming up with a lot of sustainable finance products. So green social bonds, sustainable bonds, green loans, ESG funds are a sort of project, the products which are being launched by the financial institution at a very bigger pace, and they're again like spreading like fire. I mean, almost every global banks have started offering these sort of services. So green social bond, basically they are like it enables capital raising and investments for new existing projects with environmental benefits. So something and some part of EAE or S or SG is being given to these products so that the overall category can be termed as ESG thing, the green thing, the sustainable thing. So I just thought of let you know that how I mean, they are like very brief in terms of the explanation. There are like plethora of ESG products, but the majority of the categories are like this only. I mean, so the ESG funds is sort of linked with the asset management part, right? Green loans are being linked with the corporate the wholesale banking or the retail banking thing. So if I want to take a new electric vehicle, let's suppose, so I'll go to any bank and say, hey, I need a electric vehicle loan, so I'll get some sort of a subsidy. I'll get some sort of a waiver in terms of interest rates. So those sort of a green loans, sustainable bonds, green bonds, I mean, these are like the predominant product categories. All right. So I'll just give you like a couple of minutes so that you just can go through with the slides, since these are the products which you all might be coming across with somewhere or the other. Moving, then we will just talk about the very interesting topic from my point of view, which is the standard assets. All
Abhinav,
right.
Abhinav,
Yeah. Yeah.
like when I was reading a lot of reports about non-financial banking sector in NFPC, कुछ बोलते हैं. So that time, one bank said that they are linked sustainable linked bond. So it also the bond.
Yes, 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 yes. That can also be considered as a ESG product.
Okay.
Yes. So sustainability linked bond, green, I mean, sustainability linked loans, sustainability linked financing, they are all like that sort of products only. So we, as a part of our processes, we also give a lot of the ratings to the banks who have the number of ESG products, right? So just giving you a tip of the iceberg thing, if none of the bank have any of the ESG products, so they might score less, right? So that's how it goes. So we want, I mean, the rating agencies wants the banks to have ESG products now.
Correct. Interesting.
Yes, yes, yes. If not, so I mean, let's not give them decent rating on that front. All right. So Pratiksha, can we just move on to next slide? So we have.
Abhinav, I had a question regarding the sustainable financial disclosure that has come out in Europe. So the Article 8 and the Article 9 funds, what are the ESG funds then?
Which regulation you are talking about?
I'm talking about the SFDR that has come out in Europe, that is coming out in Europe. So they have a clause for Article 8 and Article 9 funds. Which are basically sustainable funds. So uh, under which
Yes.
category fall do you?
Right. So basically in SFDR, so what SFDR article, I think, correct me if I'm wrong, if you might have gone through with it more elaboratively. So the Article 8 and 9 is sort of more or less linked with the intent as to reduce or to prevent the greenwashing and the claims that the products are sustainable. So any products which are being listed as a part of Article 8 and 9 can be termed as ESG products. It's just that the intent, the basic intent behind those products should be the one because of which they have been brought up into the picture. So it's not, they should not make any false claim. So the term greenwashing should not be there. So the Article 8 and 9, if I remember, so it talks about, I mean, preventing those products from getting into any false claim. And yes, they are being termed as ESG products.
Okay, thank you.
So I think the Article 8 was more or less the products which were like promoting the E and S characteristics, right? So yes, they can be termed as. But if I talk about the public disclosures of a lot of financial institutions, so they are not disclosing their ESG products as per the SFTR, the disclosure. So if I have to give any sort of a product disclosed in my public reporting, so I will not term it as the article 8 or 9. It's just that a normal category of sustainable product would be the one that through which I will be reporting it.
Okay, because I know that there are a lot of clauses to those funds, and it's still
Correct.
in the, I mean,
Correct.
it's still not comprehensive as yet. It's still
Right, right. Exactly. And I think a lot of frameworks that have been coming into the picture because of so-called boom of ESG. So it is going
yeah.
haywire. I mean, if you talk about SFD or TCFD, they are not. I mean, there are a lot of things that are being happening at the end. All right. So let's go to the next slide. I mean, let's talk thoda sa descriptively in this thing. So the stranded assets. So any one of you have heard of stranded asset name by any chance? All right. So I'll consider it as no. So basically, stranded assets, or we just can call it ESG risk impacting funds. So the stranded asset is the term used to describe an investment that loses its value well ahead of its anticipated useful life because of impact of various transformational changes. So I have just given up one example of Boeing 747. So jumbo jets have become stranded assets for many airlines as the industry has switched to more fuel efficient twin engine airliners as replacement for the four engine jumbos. So the unwanted 747s cannot be sold, right, and are often simply written off. So basically what is happening now is you have a business model, right, and you have put in so much of money in that model. Now suddenly the ESG guy comes into the picture and then say, hey, this model is not aligning with ESG thing, so let's scrap it off. So now you imagine a lot of money that has been put into that model has gone waste. So that asset, that that thing has become stranded. So because there are many more transformational factors at work in our world these days, notably environmental shocks, new technological and disruptive innovations, evolving societal norms, the concept is increasingly important, right? So the critical point is that these new sources of transformational risk are not necessarily captured in financial reporting. Examples like risk of loss from extreme weather, supply chain problems, and financial systematic risk are not easy to measure. Hence, not surprisingly, these ideas are not yet well shaped in investment thinking. The fossil fuel issue has come a long way now in a short time. So there is a growing realization that we face a tension between the fossil fuel reserves of the global energy industry and the carbon budget to use before we undergo a transformational change in our climate. So the global accord from copying, which aspires to a 2 degrees Celsius rise in global temperature, limits us to burning up to around half of current reserves. I mean, this is something big. So changes to the physical environment driven by climate change and the society's response to these changes could potentially stand entire region and global industry within a short time frame, leading to direct and indirect impacts on investment strategy and liabilities. So now let's imagine the whole Middle East is into exploring oil, right? So they are all dealing with the fossil fuel industry, and then there is a sudden spike in ESG related requirements. So the country will stop importing the oil thing from these countries, and then the money that they might have invested in those projects of oil drillings and oil this thing, so they all go waste, they all become standard. So this topic in itself is becoming and gaining a lot of importance in today's world. So it's like, I mean, what generally happens is that changes to the physical environment driven by climate change and the society's response to these changes could potentially stranded entire regions, as I just I just again reiterating the same. So asset stranding is already taking place in some industries. For example, the increase in renewable energy generation, worsening air pollution, and the decreasing water availability caused by climate change, coupled with widespread social pressure to reduce China's demand by thermal coal, have negatively impacted coal mining assets in Australia. So that's how it basically reduces the value of an assets because of various uncontrollable transformational changes. So therein we come the terms like, the physical risk assessment, the transitional risk assessment. I mean, that's a little bit in technical stuff, but that's how it goes. So we have a lot of oil and gas related companies like Shell, Exxon, Pemex. So they are basically, it is claimed that their investment of 70 USD billion is at risk because of this thing only.
I just, what is the sovereign debt, please? I mean,
So sovereign debt basically, what generally happens is the countries comes up with, let's assume a fund, and they will invite the money into that sort of a fund. Although the debt is an asset class, but I am just trying to explain you in a very easy language, I would say. So the country would come with one fund. They will say, hey, invest in this fund, and we are going to put this money in XYZ avenues. So it basically, what happens is that avenues are being, could be exposed to fossil fuel sector. It could be possible, right? So they just try not to invest in those avenues which are not, which are not harming the ENS part of the environment. So if the government has put in a lot of money to fossil fuel thing, the whole sovereign debt is at risk, right? That's how it goes.
okay, thank you so much.
So basically, the basic meaning of sovereign debt is that, like, it's a sort of an amount that, the country's government has borrowed, right? And they basically issue a sort of a bond, I would say, short, any security, and then the citizens of that country, or like other clients as well, they invest in those, in that sort of a revenue, and that money goes into various avenues. So that sort of avenues, if those avenues are linked with like fossil fuel assets or anything which is harming the ENS part of it, that they are at risk of getting stranded, I would say. And since sovereign debts are like very huge in size, because the whole country is like sort of investing in those avenues, so the amount of money which is being involved in getting the stranded thing is that very high. So you can see, if there is a sovereign debt and that has completely gone stranded, so it might impact the economy of that country very drastically.
Understood.
All right, I think let's call it the whole session, and maybe if any question that we have regarding any part of it, uh, so maybe if not, so we can just, I can just share my experience within my area of field, how uh, how start of my day and what
मला
SLP.
बोलायचं प्लीज आवाज बंद कर.
Yeah, Pratiksha. So, do we have any doubts, or by the audience, or anyone would like to raise anything? In terms of any queries or something that sort. So I tried my level best. I tried my level best not to keep the whole session too technical. I understand there were a lot of financial jargons. So I tried my level best to explain those jargons then and their time, because but still, I tried my level best to keep it very simple and basic. Yeah, I was just getting some sort of a query.
Sir, can you elaborate something about stress testing on banking related sector?
Uh, can you just repeat? I couldn't hear.
Test. The last slide is about stress testing.
A 2-degree test. He's talking about 2 degrees Celsius test. Right?
Yes.
Come again. I
Climate,
can't.
climate stress testing. It's
Yeah,
related
yeah.
to financial.
So basically, it's like aligning with the 2 degree Celsius. If you might have heard of the Copenhagen Global Accord, which came in and aspires to a 2 degree Celsius rise. So it's just that they are sort of doing a stress test. So there are like a lot of stress testing methodologies that we have: RCP 2.6, RCP 8.6. There are like a lot of stress testing methodologies that are there in picture. So it is extremely technical in nature. It's just that they just test as to how much temperature they have been able to control. and how much they are able to do it in a sense that it is not harming the basic intent of that accord basically that came in picture, the global temperature rise.
Means, is it related to funds or capital?
What I mean, there's some sort of distortion in words.
Sir, is it related to any funding or capital for banking sector? My
Sort of,
question.
yes. I mean the capital plus the avenues as well. I mean, so supposedly if the money goes to any avenue, so how much? So they do sort of a stress testing as to what temperature. I mean, what that money or what that activities doing in terms of increasing the temperature, or what sort of is there behind that sort of investment or the avenues. So it's just that they try to test. I mean, they try to test the temperature rise or the decline thing.
Okay, thank you.
So if I talk about various, this thing, uh, stress testing scenarios. So there are like various scenarios being given by, uh, as far as the CDP thing is concerned. So I just took certain name. I mean, there is RCP 2.6. There is like, I mean, there are like many. I mean, you can just normally Google it up, and then there are a lot of climate stress testing that is there, and there are a lot of tools, technical tools are involved in order to get those check in terms of how much temperature is rising or decreasing because of any sort of activity.
Okay, Abhinav, it was a really, really interesting session. I mean, most of them are new to this finance and ESG.
Pratiksha, I have some questions,
Yeah, sure,
if you
go
don't
ahead.
mind.
Yeah, yeah.
Yeah. Hi, Abhinav. I really like your session. Got to know a lot of new things. So I have three questions specifically, and since the session's name is Ask Me Anything, so I am someone who has background in academia,
Hmm.
in ecology, and I'm trying to shift into ESG sector. So I want to make a career in this.
Hmm.
So the questions that I have are, what are the skills that would make me stand out? So since you are in a senior position right now,
Hmm.
what are the skills that you would look at when you are trying to recruit someone in this sector? Someone whom you would consider as a catch.
All right.
That is one. Number two, will an MBA from a good university will help uh, in this field? And third one is, what are the opportunities to work with international organizations such as OECD or World Bank? How does it look for person who is from India? So these are the three questions that I have.
All right. All right. So may I know your good name, please?
My name is Leela Prasad.
Neela. Yes.
Yeah, you can just call me Leela.
Okay. So Neela, the idea of the ESG domain is that, I mean, there has been a significant shift of the interest in ESG in past 4 5 years only, right? So none of the universities globally based out of, and I mean, if I talk about India specifically, so none of the universities or any education institution was ready to face that sort of a huge demand in this field, right? So there are various institutions which are still struggling, in order to come up with ESG courses. So if you are from academia or any one of you want to switch to ESG as a domain specific thing, so I would highly, highly, highly encourage you all to pursue the most credible certification. I would still, I mean, reterm it as credible certification, right? So since many of you might be from different backgrounds, there is no specific degree in terms of ESG as of now, as far as I know in India, right? So you don't see, I mean, it's just that you have BTech in environmental engineering, that sort of is there, no doubt. But specifically, if I say I mean, bachelor's in ESG, something that sort, it's not there. I mean, since that's why the individuals, the professionals struggles to get into the ESG field, right? So the most basic and the basic entering strategy is to pursue most credible certifications. So if you talk about my list of certification that I consider them as very, very highly renowned certifications, you can just note it down. I mean, if all of you would want to, or maybe definitely I can share these names with you all. So one is CFE ESG analyst, another one is Sustainability Excellence Associate, Sustainability Excellence Professionals. Fourth one is FSA level 1 and 2. It has been conducted by SASP. The fifth one is EFFAS ESG analyst, right? And there is one more thing that has recently came in, which is SCR, I think, if I'm not wrong, by GARP, GARP. Right. The first foremost strategy would be to get these certifications done. I mean, they involve thoda sa zyada cost. So I would suggest to get them, I mean, one by one, obviously. But before starting up with this ESG field, I mean, you need to get in touch with the companies, obviously, like which are dealing in ESG domain in India. So there are like various companies who have started coming into the ESG domain. So we have Facilitates, we have MSCI, we have S&P, like we have eValueServe as well, we have Big Fours, they are doing ESG consulting. So if you want to get into the ESG domain as a fresher, obviously you might have to compromise on your pocket a bit in terms of the remuneration, right? So what you can do is you just get a basic entry level job and then start pursuing these certifications, and within a couple of years you will be able to get these 5 done, uh, as far as have already gone through with their curriculum. And the second doubt of yours was to get the international exposure, right? If I'm not wrong.
Yeah. So second one was will an MBA from
Right.
university will help. And the third one is international job prospectus.
Correct. So if I again, like, we do not have any such university in terms of ESG courses, but obviously, like, if someone is from IIMs, someone is from FMSs, and then like a lot of other big short B schools, then again, I mean, you have to struggle a bit in terms of entering into ESG domain, because the company which are coming in sort of placement in there and these universities are still looking for the traditional profiles, the investment banking, the M&A consulting and strategy consulting. So I was just reading one of the report by one of the third party things. So what they have just stated that mostly the IMs, the getting companies are still very rarely, out of 100 only 1 or 2 companies are putting their candidates into ESG consulting. So there are still looking for candidates in investment banking part of it, the M&A banking part of it. So if you are from any reputed university or not, it doesn't matter at all. But so if you have received an MBA degree from a average college and then you are occupied with the certification that I shared with you, trust me, within, if you have a decent strategy to explore new job opportunities within like 2 to 3 years, I mean, you would be working in any Western part of the world. I mean, these certifications are such reputed ones. So I myself have received a lot of applications from Johannesburg. One was from Copenhagen, and then that's why I'm saying that there is a huge demand even in the Western part of it. It's just that at there you need to prove your metal a bit more. And how do you prove your metal? Is just by occupying, or by equipping yourself with a lot of knowledge and content based of it. So how do you get that? Obviously the certifications part. The third, the international one. So yes, as I already reiterated that there's a very huge demand in ESG professionals. So again, like, you need to have that sort of a content and skill set that is being required, and then trust me, it is not an very difficult thing. So there was a saying, you might have heard of it, like, the engineers or the web developers, the software engineers are making up to the Western countries. Nowadays the ESG professionals are getting selected within these field at much as fastly as compared to those engineers thing as well, right? So if I talk about my experiences, whenever I was taking sort of I used to take interviews in my later company. So people having decent ESG experience are not even aware of simple SDGs, sustainable development goals. So if any one of you or all of you are thinking to get into the ESG part of it, so SDGs, the frameworks, TCFDs, they are like the plus division multiplication part of it. You should be, I mean, all these things should be at your tip of the fingers, I mean, right? stress testing, physical risk assessment, ye sab, I mean, all these things are very technical in nature. Even if you're not aware of these things, even then recruiters uh, are that lenient at that front. So getting an insights on various basic concepts is a very basic requirement if you talk about my perspective.
Sir, what was the name of the
Thanks
second
a lot.
one? Sustainability something
What was
ESG.
come again, what is the name?
ESG. Yeah, you said sustainability something. So what is the name of the certification?
Yeah, so it's sustainability excellence associate. Third one is sustainability excellence professional. So these are like the same, I mean, they are being conducted by same organization. I could not recall which was it. The fourth one is FSA level 1 and 2. This is being conducted by SASB. And the last one is EFFAS ESG analyst. So in EFFAS ESG analyst, you get the accreditation as an analyst, right? So again, like,
And what about gap? It's conducting one session on October. Almost
yeah,
7,000.
that yes, that was I was talking about it. I think it was SCR by GAR, that they are inviting application at, they are receiving application at very huge rate.
They are charging almost 80,000.
Yes, I know. So all the certification that I shared, they are costing minimum, I think 40-50K. So I think the best way to deal with this, maybe if you talk about myself, had I been be aware of ESG of 5 or 6 years back, I would have, instead of doing a master's or post graduation, I would have done all these certification, and then I would have taken MBA through a distance learning. Anything
So,
else?
sir, there is a certification course on PCFD. It's almost cost about 40,000 almost. So, is it worth doing?
Right. So, see, there are like many courses, as I've already reiterated, but you just restrict yourself to those certification where you need to pass any sort of examination, and the passing rate of that examination is where the passing rate of that examination is very low, because there are like a lot of examination which are being conducted, and you need to just score 80% or 70% passing rate. And the question is, I mean, the questions are very easy to do it. So wherever you are putting extreme level of efforts, that sort of certification is the credible one. I mean, that's a very simple basic rule.
Hi,
Anything
Abhinav.
else?
Okay,
Arun.
can I, Arun, sorry, can we do this one more like AMA, where I am going to ask him few question, he's going to reply us so that we can solve a more doubt. Okay, so I'll do this. After that, Arun, you ask question and we will wrap it up. Okay.
Sure.
Okay. So give me a moment. Hi, Abhinav. So the question for you is, what inspired you to get into ESG sector?
That tremendous percentage growth of ESG assets under management.
Great. What advice would you give to young professional who wants to get into ESG domain in just few minutes?
All right. So this is the most important. I mean, from my perspective, the most important question, and a lot of my subordinates do ask this question with me as well. So, guys, I mean, there is a huge rush, right? There is a huge rush within the ESG profile, right? So I would want all of you to stay calm, in a sense that if in case the E and S interests you, only then think of getting into ESG. So mostly what right now is happening is there is a sudden spike in the application in terms of ESG, and the people are just going to into the ESG because of the huge scope, because of the huge money involved in it, because of the huge recognition. I would strongly suggest you to not consider that factor as your primary motivation, right? So if scope on emissions, so what generally happens is that one of my friend, obviously there is no offense, it's just that one of my friend has done the hotel management and then he or she was trying to get into ESG. But when I asked why, so he or she was like, obviously there is a lot of scope, and then people are asking what ESG. But then I would just ask, then what about your health management, I mean that thing, कहते it's okay यार मतलब. So what I'm trying to say here is that although it is fine to get into ESG, is just that try to follow your interest first. If you still are there into investment banking, M&A, or let's suppose any of the business function, and you think that is the area of expertise or the area of interest, continue pursuing it. Don't enter into ESG just because there is a huge rush, there is a huge demand into it. I am not demotivating all of you guys. It's just that there are like very numerous number of folks that interacted with me, and they are highly interested in the ESG part. So obviously, like, why not to give it a try, right? So definitely you can give it a try. And but since the process wherein I am working in, out of 20, 12 to 13 FTEs, the employees are sort of demotivated at the end. Reason being is that they are sort of finding it very general. I mean, what is environment? Yeah, what is scope one emissions? We are here to measure the scope and emissions. So that sort of a feeling arises with time, right? So first analyze, and then when you are finalized and whenever you are of the mindset that yes, I want to make the career into ESG, then start putting your money into the certifications.
Okay. Out of ESG, which one is the dearest to you
In terms of
in terms of rating, in terms of anything? Like, what do you like the most? Like, I like
the
the
the the ratings and the consulting part. So the
yeah.
ratings, I think the ratings, so predominantly what the environment looks like is that, so the companies which are operating within the ESG field, so the consulting would only, I mean, consulting would only be easy for all of you if you have worked within the ratings part, because you know on which parameters the companies are getting ratings, and on which parameters they are scoring high. So if you know how MSCI ratings works, and then you enter into consulting business, then you can say that, hey, I've already worked in MSCI rating processes, I can help you in increasing your ratings. So I
Hmm.
think first let's explore ourselves to the ratings methodologies and how the companies are getting scored, and if post that one should enter into consulting. Like what generally mistake I have seen people are doing, that they are entering to consulting but they are not aware of anything. I mean, they just Google it up what is emission, and then they just copy paste the same definition to the Word document and they send it to the client. I mean, this is something very basic thing. I mean, so that's how I look. ESG ratings first and the consulting at the second.
Okay, thank you. Last question. There are three questions, but I'll ask one more. What is the most exciting and most boring part of your job?
The exciting part of my job is to read 1,000+ reports within, I think, on a quarter basis, and get to know what sort of disclosures are coming into the picture and what sort of trends companies are following on. And the most boring part of my job is that I think the repetitiveness. I mean, it's everywhere though. The whole 70-80% employee base within India are surviving on control C control V thing. So I think the most basic I mean,
That's
I hope that that's not sounded a bit harsh to everyone.
yeah, amazing. The last question. What are the tools which you use in office when like tools which you use, or tech things which we need while doing the ratings and everything? Tech side of back.
Right, right. So, guys, I think it's again a very good question. So, a lot of people ask me like, what sort of tools you work on and how does it work? So, again, like the importance of the importance of excellent PPTs as equal to as the importance of control C control V is that the basic skill that that you equip yourself within the time. I mean, with the time, is that you get good hand on your research skills, right? So if I want to see how much CEO is earning with respect to its employees, which is the S part of ESG, so I can do it within a couple of minutes if I'm being given a company just now. So that sort of a skill set you get it post with certain, I mean, with time, the research skills, the keywords that you leverage while searching for any sort of information. And then the second skill that you and I mean that we look for within our process is that the comprehending skills. I mean, you have, at times on my laptop there are more than 20-30 Google tabs open, and then I have to write two paragraphs out of 20 tabs open. So that sort of comprehensive skills obviously comes with the time, and then you just accumulate that sort of findings into the Excel or the Word, and then you just sort of modify it, give it a rainbow colors, that sort of a thing, and then present it. So second is in comprehensive skill. The last skill would be obviously like Excel, Word, PPT. These three will always be there till your retirement. Although we have Power BIs, Tableaus, we have Python coming in, they all at the end become the supporting part of what we do, right? So we have, let's suppose, thousands companies to rate on. So which data points would be coming in from which page number of the report. So that front Python comes in, but the people, the analysts who are working at the ground level, they are not exposed to the Python as much as, I mean, in at least in my processes, because they are being taken care of by the IT support teams. I mean, they assist as a support to us, right? And I think that those are the skills. Since but the most important skill within ESG is the English comprehension skills, your writing skills, and the research skills. So if you want to start up your skills, I mean, you start up your upgradation into skill of ESG, start reading the sustainability reports of companies, the top-notch companies, and spend like just go through with two reports per week, and you will get to know. That's all.
Thank you. Thank you so much. Arun, now you can go ahead, and last question from Arun. We will wrap it up after that. And thank you, Abhinav, for spending 2 hours with us on on Sunday morning and afternoon. So,
No worries. So just before taking up the query from Arun, so guys, I mean, I have been taking a lot of queries on various forums in terms of because there are like many candidates studying in universities and started up with their careers. So yeah, obviously, like this session was very short in terms of taking all the doubts, but I would highly encourage you all to get in touch. I would be happy to assist all of you. Obviously, there is nothing like monetary involved. I just ping me on LinkedIn, I'll give you my WhatsApp number, give me a call. So as of now, there are like more than 15, 16 individuals who gave me a call once a week or twice a week, because and they are all ranging in from PhD holders, or they are like from they are from the universities doing their MBA, something that sort. So I would be very happy, because I certainly feel that maybe someone would have been there when I was looking for that sort of exposure. So I would have been at, I mean somewhere else. So I just thought, let's give that sort of exposure to the people who are actually looking into this beautiful environment. I mean, yeah, Arun, go ahead.
Okay.
Very good thought, sir.
Okay, great. Thanks. Just to continue what you actually started and you left in the middle, you started off saying with your day starts like, and then we got into too many questions. So would you mind going with that, and then I'll ask my follow-up questions. Is that okay?
All right. So it's just that. So in the morning we just look up our mails, and we just see what are the the mails that we have received from the companies that are being rated by us. So there are at times they are a bit unhappy about the ratings, they are at times very happy about the ratings, and then we just see what are the parameters wherein they have lagged or wherein where they have scored very maximum. So in the meantime, what is the continuous process is this, I mean the company's rating processes, though the analysts who are working at the ground level, they keep I mean they keep giving ratings to the companies on a daily basis. So there are like targets aligned. Is this, I mean this is the practice across the rating agencies. So it's just like one analyst has to do XYZ number of ratings per week, and the magnitude of those, you know, I mean the parameters involved in the ratings ranges from 1000 to 200 2000 data KPIs. And on side by side, since I have been managing a team of 18 to 20 FTs, so my area of responsibility lies the pipeline management. So how number of companies being there within the rating environment from the financial sector. So the whole global financial sector ratings have been I've been taking care of in terms of their report, I mean their assistance. We also do engagement, right? So engagement in terms of, so they say, hey, I mean we want to participate in our index, so what can be done? So yeah, I mean welcome, I mean we can assist you in so and so thing. You need to get your company, you know, assessed or due diligence from our analyst, and then we will give you a comprehensive report. So that comprehensive reports, we just tell them, I mean what you are doing, what your competitors are doing, and that reports are like being presented on the PowerPoint presentations. Is just that it's like a company's benchmarking report sort of a thing, wherein we give them the industrial leaders, and we just tell them, hey, your competitor is doing this good, you are not doing good, so that's why your score was less in this thing. So that's how it goes. On a third
Sure. Mhm.
on a third line thing, we just also, I mean I'm basically involved in a lot of training sessions, because there are a lot of guidances, there are a lot of frameworks that S&P relies on. So we keep on updating those guidances as per. We also involved in creating new criterias of rating methodologies. That's all.
Awesome. Thank you. Thank you for briefing, taking time in detail. And just to go with the flow with the AMA, what differentiates performance and peak performance from your point of view?
All right. So says I have taken a term called TJSI, Dow Jones Sustainability Index. So there are like it's like a uh, I mean it's like a festival. I mean that the companies and that S&P. Obviously it's not literally festival. I'm just telling you how exciting these months are. So that these months are like from April May to September mid. So what happens is the companies, a lot of companies across global and various sectors, technology, metals and mining, oil and gas. There are like various sectors, hospitality. They come to us and they say, hey, we want to participate in DJSI, and we want to get ourselves rated. So please, I mean, take us in. So then what generally happens is that we start giving them scores. We just start studying their reports. We do a comprehensive due diligence part of it. So in those 4 5 months, because that index gets listed and gets published at the October mid or end. So just keep following. You will see Dow Jones Sustainability Index 2022 being published by I think October end, because the whole campaign is whole project is over now. We have completed the all that the scores are going to be published now. So that's how it goes. I mean the 4 5 months are a bit hectic.
Right. Okay, perfect. Now I'm going to ask the question at the moment. So here's the thing. That'll take 5 minutes of probably your time. Okay, so, but it's going to. I have divided into 5 different pillars. One, I come from Euroclear, and that's my predominantly in IT advisory in the Belgium. So that with that note, I think I just wanted your point of view on what funds, ESG funds, in the future that we are even looking for, or what is the state of art of investing or the future predictions? Because this is one thing, which everybody, I'm actually reading through a lot of things. I've actually attended one of the HNI events in Chennai yesterday, and this one thing which I'm not able to get a clear clarity. Maybe something you can help me with this. This one first one. Maybe if you keep answering, maybe I'll ask like a 3 similar questions, short questions. Would it be okay?
So is it about, you are asking about the top best ESG investment avenues or ESG funds, if I'm not wrong?
I mean, what is the scene of Indian ESG funds scenario? You can answer in both aspects.
All right. Uh, so India as a ESG investment environment, they have started getting that sort of a heat, within India, I mean to say. So there are like a lot of AMC which are coming up with their ESG funds. So basically it's like the total, as far as I still remember, the total asset under management within like ESG thing by private equity funds are like more than 650 USD million. So I think if you're asking me about the top ESG funds, so from Indian perspective, I might not be able to suggest the same, but it's just that whichever fund you are picking up, right? It could be international, it could be ETFs, it could be any fund that you are going to pick up. Just give it a read. I mean, give it a thorough read, I would say, because nowadays what generally is happening, since because of the companies are running towards a positive ratings, positive scores, they are getting involved themselves into a lot of greenwashing claims. So what greenwashing, I've been taking this term many a times during my presentation. So greenwashing something means that the companies are claiming, hey, we have 100 USD million as our sustainable asset under management, but when the SEC started, inquiring or started analyzing those disclosed amount, they found certain mischievous things. I mean, they're not exactly that sustainable, something that sort. So though that sort of a greenwashing is extremely becoming hot topic. So whenever you get into study about the greenwashing thing, but I will still suggest that you should give it a read. What is the portfolio size of that particular fund or the investment revenue, what companies they are going to invest in. So ESG just not means planting more trees, right? It just doesn't mean that you are donating to NGOs, right? ESG is extremely beyond that. I mean, people do get in touch. Hey, can we just consider afforestation as a part of the ESG? And yes, but it is just 0.0001%. I mean, ESG is a very laboratory, right? So whenever you are investing, I mean, this is for all. Just read about the investment revenue first. There is no false claims. There is no legal dispute being happening, and then take your call.
Right, right. The reason why I base my question is, I'm looking at, floating some ideation on ESG consulting as a service in India. One, if I have to have, I personally don't see in ESG adoption for corporates, right? So in order to have the corporates educated and keep them aware, I need to help them understand what goes in ESG, right? And eventually the fund managers will come up with these houses of ESG funds and all those stuff. That is the reason why I asked, because I somehow feel that the adoption it will take some time in India specifically, and I'm basing all my questions in and around India. I'm not getting into the global scene at the moment, right? So that is the reason why I asked. And second is, yes, we're talking about banks and all those stuff, but there is a ESG for private equities, on ESG for the way I look at it, ESG for fund managers and ESG for corporates. Is there a possible differentiation that we can make?
Not exactly. I mean, they somewhat somehow sort of related
From
in terms of
right from a tech tool perspective. A guy, I'm looking from that aspect. ESG for fund managers will involve all these scorecards and metrics and all the stuff, which will have to, and that is one of the reasons why you can also, your team will have some proprietary tool, right, for ratings and all the stuff. So that may be falling under the fund managers. ESG for corporates is like majorly building a dashboards and having some touch points, and it may not go deep dive down, but that is how I see it, two different scenarios, right?
Right. So in case, see, I still remember there was one more individual who got in touch with me. So I think the best scope within the India market to touch upon in terms of the ESG playing field is the disclosure part of it, because Indian companies are sort of struggling in terms of generating good scores in a lot of rating agencies. It's just not the way that they do not do in terms of the good ESG practice. They do it, but it's just that they do not disclose, or they fail in terms of aligning themselves to various reporting standards. So if I talk about India, there we have just recently got BRSR, right? So a lot of rating agencies have their own methodologies to give the score. So if you have someone who can assist your firm to develop those frameworks in terms of, and then aligning it to the disclosure by the Indian companies, and then Indian companies will start getting good scores, right? So the Indian companies will be happy with you, so they will start giving you more businesses. So the idea here is, and what I think in India, the scope of the ratings is bit high, since the scores of Indian companies are very low.
Right. Mm-hmm. Sure.
Right. So supposedly, so you have company A, right? And then you say, and you go to that company, hey, I'm so and so from this company, and then I see that your score in past so and so years in these rating agencies was was this low, and I can assist you in raising your score by so and so much in 2 years time frame, right? So obviously that company would be, would be interested enough to increase their score, since increasing the scores of ESG would attract a lot of finances, right? They will start
Indeed.
becoming good players, right? They will start getting into indexes, they will start getting into various platforms, and then they will start getting money inflow. So they would want good scores, right? And if someone can assist a person who can, if someone can get a person who can assist in increasing the ESG scores, there's no doubt in getting more revenues from out of it.
Right. True.
in
And that.
yeah, in fact the whole consulting business, I would say, if you talk about KPMGs, McKinsey's and all those things, they are sort of driving the sustainability strategies just to increase their scores, right? They would want to implement certain ESG strategies, and but the end game would be the one they want to increase their scores.
Right. Indeed. Yeah. Got it.
That's
And last, but one question is like what is what is your catch on the VCs focusing on ESG space, and what percentage of funding they actually allocate
the
for
venture
ESG?
capitalists.
Yeah, that's correct.
All right. So I generally, I do not have that sort of a statistics with me. As to how much momentum of ESG is getting into venture capitalists. But I got in touch with one of the professionals on one of the forums. So what they were doing is that, so this is from the M&A perspective, I will not say it's from the private equity thing. So the M&A perspective is that supposedly company A wants to acquire company B, so now the ESG scores or the ESG performances has started getting inculcated into the valuation methods, right? So
Right.
you derive the company's value. So if, let's suppose there are two company A and B, one company scores maximum the ESG score and company B scores lesser, but the value of those two companies are somewhat similar. But in order to get the acquisition part of it, so company A looks very attractive, and that's how the various private equity firms, while doing valuations, and they do a lot of this thing. All the financial analysis, they have started doing the inculcating the ESG part of it into their financial statements. So they say, hey, what is the score? And we will just try to give them a weight as well during our valuations. So that's how it goes.
Sure. Okay. And last observation I had from one of the meetings I recently attended yesterday was just to pick your mind. The thematic investments that happens across the globe is, current theme at the moment is chemistry, because we talk about carbon neutral and a lot of things. This has been designed like 5 years ago, and that is what we've been focusing right now. And earlier, 5 years ago, they're talking about metals. Okay. And right now there was a interesting question that I asked, okay, now that we are all riding the wave which has been designed 5 years ago, what is in the future? So from 2022 onwards, the answer was biology. Okay. So that is the theme for the next 5 to 8 years. I understand this is the genome and all this stuff, but is this something that you also get from your research, from a thematic investment across the globe? This is my last question.
So basically, we do not actually work on the thematic, the funds categories though, but I do have a fair knowledge base on this. So basically, the thematic, obviously you might be aware of, the thematic funds are being relied on a particular theme. The very basic fundamental ideology as to what sort of ideology the fund has, and then the money goes into that sort of ideology. So what generally happens is that, as you have just stated one theme, that the biology is something which is going to be a theme in coming 5 years. So the mutual fund managers or hedge fund managers, they mold their portfolio companies in such a manner that they start going gradually in that particular theme.
right? But if you talk about any numbers supporting my comments, I mean, that where I would lack somewhat.
Yeah, sure. No, no, no. I mean, the reason why I'm asking is like these are one of the very ultra high net worth individuals and also the big firms which are part of the big policy in Delhi and who's sitting from Chennai and they're running the houses. And these guys are coming up with this one, which I personally, you know, if I not attended, I would have got to know about all these things, about the ideas and all this stuff, maybe 3 to 4 years from now. Some capitalist would have written in the paper, and maybe yes, I would have gotten that. So it is quite interesting, you know, quite interesting to see the thematic thing arises, which is not even in our purview. And I understand that, you know, we're talking about all the climate and the chemistries right now, which has already been designed 5 years ago. I mean, like I'm feeling how late I am to even to understand. So yeah.
True.
Okay, Abhinav.
Yeah.
Yeah, can we wrap it up?
Thank you all. Yeah.
Yeah, sure.
Thank you, Abhinav. You can reach out to Abhinav on LinkedIn, and I have already mentioned the his LinkedIn account on Welcome Kit. You can search and you can find them on LinkedIn. And okay, thank you. Now,
I hope the whole session was sort of fruitful. I would say I know there are like many people not from finance background, but I tried my level best, and it was really amazing interacting with you all. And I hope the same you might have, I mean, faced me for a couple of hours. I hope it was not that boring though.
yeah,
No,
it
definitely
was
not.
wonderful. Because when I was the ESG analyst in the start, Deloitte gave me banking sector, and I could not even recognize what is wholesale sector, what is private equity, what is happening, because it was so unreal. And I used to be very scared with the finance thing, but now I really get it, and I understand how and why this is really important for me to understand this finance in ESG. So thank you so much. Let's wrap it up, and bye.
All right. Thank you so much,
Bye.
guys.
Bye.
Thank you. Bye bye.
Thank you. Thank you.
Thank you.